Key budget terms and meaning. Finance Minister of the country every year, along with his budget speech, presents to the Parliament and the nation the state of economy. They are presented as various budget documents. These budget documents explain the key concepts and parameters pertaining to the economic conditions of the country. The budget of the central government is not merely a statement of receipts and expenditure. Since independence, it has become a significant statement of government policy. The budget reflects and shapes and is in turn shaped by the country's economy as well. For a better appreciation of the impact of the government receipts and expenditure on the other sectors of the economy, therefore, it is necessary to group them in terms of economic magnitudes. For example, how much is set aside for capital formation, how much is spent directly by the government, and how much is transferred by the government to the other sectors of the economy, and it could be by way of grants, loans, etc. Therefore, there are lots of economic terms and concepts that are involved in the budget formation as well as in the budget that is presented to the Parliament. Now let us try to understand what these terms and documents mean, because this topic of budget itself is an important topic which often finds place in the civil service examination. Now, the various terms and documents that are connected with the budget are annual financial statement, that is AFS, demands for grants, appropriation bill, finance bill, microeconomic framework for the relevant financial year, fiscal policy strategy statement for the financial year, then there is a medium-term fiscal policy statement, then there is a medium-term expenditure framework statement, then the expenditure budget, receipt budget, budget at a glance, and finally the highlights of the budget. These are various documents that are talked about in the Parliament, and they are published as a part of the budget presentation. Now, out of the above, the annual financial statement, demands for grants, appropriation bill, financial bill are mandated by the Constitution of India. The documents at serial 5, that is macroeconomic framework for the relevant year, fiscal policy strategy statement for the financial year, and medium-term fiscal policy statement are presented as per the provision of the Fiscal Responsibility and Budget Management Act of 2003. Other documents are in the nature of explanatory statements supporting the mandated documents with a narrative or other content in a user-friendly format, and that is suited for a quick contextual references. Now, of course, the Hindi version of all these documents are also available to the Parliament, and there is also a web version. Now, in addition to the above, the individual departments, ministries also prepare, and they are presented to the Parliament their detailed demands for grants, their outcome budget and their annual reports. But one aspect is the economic survey every year, which highlights the economic trends of the country, and it facilitates a better appreciation of the mobilization of the resources and the allocation in the budget. And it is brought out by the Economic Division of the Department of Economic Affairs, coming under Ministry of Finance. The economic survey is presented to the Parliament ahead of the Union Budget. The web version of these documents are also, of course, posted in the respective ministries and departments. Now, having got this background, now let us take a look into the important terms and documents that are related to the budget. One is the annual financial statement. Annual financial statement is the document, and it is required as provided under Article 112 of the Constitution, and it shows an estimated receipts and expenditure of the Government of India for the year, say, 2016 and 17, and it is in relation to the estimates for 2015 and 16, and also with reference to the actual expenditure for the year 2014. 14 and 15. The receipts and disbursements are shown under three parts in this, in which the government accounts are kept, that is, the consolidated fund, the contingency fund, and the public account. The annual financial statement distinguishes the expenditure and revenue account from the expenditure on other accounts, and it is as per the mandate given by the Constitution of India. The government budget therefore comprises the revenue budget and the capital budget. The estimates of receipts and expenditure included in the annual financial statement therefore are expenditure net of refunds and the recoveries. The Union government finance accounts also reflect expenditure in a similar manner. Now, the significance of the consolidated fund, the contingency fund, and the public account, as well as the distinguishing features of the revenue and capital budget, need some attention to study. Now, let us see what exactly they mean. Now, what is a consolidated fund? The consolidated fund is a fund which draws its existence from Article 266 of the Constitution. All the revenues received by the government and loans raised by it, and also its receipts from the recoveries of loans granted by it, together form the consolidated fund. All expenditure of the government is incurred from the Consolidated Fund of India, and no amount can be drawn from the Consolidated Fund without due authorization from the Parliament. Now, the Article 267 is regarding the Contingency Fund of India. Constitution under Article 267 authorizes the existence of a Contingency Fund of India, which is an basically impressed fund, and it is placed at the disposal of the President of India. The idea is to facilitate the meeting of urgent unforeseen expenditure by the government, but it is pending authorization from the Parliament's approval. Parliament approval for such unforeseen expenditure is obtained ex post facto, and it is an equivalent amount that will be drawn from the consolidated fund to recoup the contingency fund after such ex post facto approval. The corpus of the contingency fund as authorized by the Parliament is presently stands at 500 crore rupees. Now, third is the monies that are held by the government is a public account fund. Now, monies held by the government are basically in trust, are kept in the public account. For example, the provident funds, small saving collections, income of the government set apart for expenditure and specific objects. Example, road development, primary education, reserve or special fund, etc. All these are kept in the public account. These public account, it must be remembered, these public account funds do not belong to the government, and therefore they have to be finally paid back to the persons or the authorities who deposited them, who lent them. Therefore, they do not require a parliamentary authorization for withdrawal from the public account. When the amounts are withdrawn from the consolidated fund with the approval of the Parliament and kept in the public account for expenditure and special purposes and objects, the actual expenditure and specific object is again submitted for vote of the Parliament, so that they can withdraw the amount from the public account for incurring expenditure on the specific subject. Broadly, the union budget can be demarcated as a revenue budget and a capital budget. Now let us see what is a revenue budget. The revenue budget consists of the revenue receipts of the government, that is tax revenues, the income tax, excise, etc., and other revenues, and also the expenditure met from these revenues. Tax revenues comprise, as said before, the proceeds of taxes and other duties levied by the Union. The estimates of the revenue receipts shown in the annual financial statement take into account the effect of various taxation proposals that are made in the financial. Other receipts of the government mainly consist of interest and dividend on investments made by the government. It also includes fees and other receipts for services rendered by the government. Now, revenue expenditure is for the normal running of the government departments and for rendering various services. And it also consists of making interest payments and debt, meeting subsidies, etc. Broadly, the expenditure which does not result in creation of assets for the Government of India is treated as revenue expenditure. All grants given to the state governments, union territories and other parties are also treated as revenue expenditure, even though some of the grants may be used for creation of capital assets. Revenue expenditure which results in the creation of a capital asset, therefore, is reduced from the revenue deficit to arrive at the effective revenue deficit amount. Therefore, to summarize, the effective revenue deficit is equal to revenue expenditure minus grants for the creation of capital assets. Now, as regards capital budget consists of capital receipts and capital payments. The capital payments are loans raised by the government from the public. They are market loans, borrowings by the government from the Reserve Bank of India and other parties through sale treasury bills. Now let us come to the capital budget. The capital budget consists of a capital receipts and capital payments. The capital receipts are basically loans raised by the government from the public. They are called as market loans. And also the borrowings by the government from the Reserve Bank of India, other parties through sale of treasury bills, the loans received from the foreign governments, bodies, disinvestment receipts and recoveries of loans from the state and union territory governments and other parties. Now, capital payments on the other hand consist of capital expenditure made on acquisition of assets like land, buildings, machinery, equipment, as also the investment in shares and etc. And also the loans, advances granted by the central government to the state and union territory governments. Further, it also includes the grants given to the government companies, corporations and other parties. Now, with this we come to the accounting classification that is made in the budget document. The annual financial statement shows separately certain disbursements which are charged on the Consolidated Fund of India. The Constitution of India mandates that such items of expenditure such as emoluments of the President, salaries and allowances of the Chairman and the Deputy Chairman of the Rajya Sabha, the Speaker, the Deputy Speaker of Lok Sabha, salaries, allowances and pensions of the judges of the Supreme Court, the Comptroller, Auditor General of India and the Central Vigilance Commission, etc. All those important constitutional bodies are included in this. Plus, it also includes the interest on payment of loans raised by the government and payments made to satisfy decrees of the courts and which are charged on the Consolidated of India. Therefore, they are not required to be voted by the Lok Sabha. Then comes the demands for grants. Article 113 of the Constitution mandates that the estimates of expenditure from the Consolidated Fund of India, which is included in the annual financial statement, that is required to be voted by the Lok Sabha. And it will be submitted in the form of demands for grants. Therefore, the demands for grants are presented to the Lok Sabha along with the annual financial statement. Generally, one demand for grant is presented in respect of each ministry or the department. However, more than one demand may be presented for a ministry or a department depending on the nature of the expenditure. As regards union territories without legislatures, a separate demand is presented for such union territories. For example, in budget 2016 and 17, there were 98 demands for grants. The breakup of expenditure under each major head between the plan and non-plan is also given. The amounts of recoveries are also shown. The net amount of expenditure after reducing the recoveries from the gross amount is also shown. Now, each demand normally includes the total provisions required for a service. That is, provisions on the account of revenue expenditure, capital expenditure, grants to state and union territory governments, and also loans and advances that are related to the service. There is what is called appropriation bill, which is an important budget concept and a document. Under Article 114(3) of the Constitution, no amount can be withdrawn from the Consolidated Fund of India without the enactment of such a law by the Parliament. After the demands for grants are voted by the Lok Sabha, the Parliament's approval for the withdrawal from the Consolidated Fund so voted, and also the amount that is required to meet the expenditure is sought through what is called appropriation bill. Now, the whole process, beginning with presentation of the budget and ending with discussions and voting on the demands for grant, requires sufficiently long time. Lok Sabha is therefore empowered by the Constitution to make any grant in advance in respect of estimated expenditure for a part of the financial year, which is pending for completion of the procedure for voting on the demands. This is termed as a vote on account. The purpose of vote on account is to keep the government functioning. Pending voting on final supply, the vote on account is obtained from the Parliament through an appropriation or a vote on account bill. Now let us see what is the frequently used word finance bill. Now, at the time of presentation of the annual financial statement before the Parliament, a finance bill is also presented, and that is required in terms of Article 110(1)(a) of the Constitution. It details the imposition, abolition, remission, or alteration or a regulation of taxes proposed in the budget. It also contains other provisions relating to budget that could be classified as money bill. What is money bill? It's a finance bill as defined in Article 110 of the Constitution. It is accompanied by memorandum of explaining the provisions included in it. Therefore, basically, finance bill will contain all the provisions, amendments regarding income tax, excise and other duties. Now let us move on to what is called macroeconomic framework statement. The macroeconomic framework statement is presented to the Parliament under Section 3(5) of the Fiscal Responsibility and Budget Management Act of 2003. And there are also rules made thereunder. It contains an assessment of the growth prospects of the economy along with the statement of specific underlying assumptions. It also contains an assessment regarding the GDP growth rate, the domestic economy and the stability of the external sector of the economy, fiscal balance of the central government and the external sector balance of the economy. This fiscal policy strategy statement is presented to Parliament under Section 3(4) of the Fiscal Responsibility and Budget Management Act of 2003. It outlines for the existing financial year the strategic priorities of the government, and it relates to taxation, expenditure, lending and investment, and also administered pricing, borrowings and all the guarantees. The statement explains how the current fiscal policies are in conformity with the sound fiscal management principles. It also gives a rationale for any major deviation in key fiscal measures. Then comes the medium-term fiscal policy statement. The medium-term fiscal policy statement is presented to the Parliament under Section 3(2) of the Fiscal Responsibility and Budget Management Act of 2003. It may be noted that this Act, that is the Fiscal Responsibility and Budget Management Act of 2003, is fairly a modern concept which defines and regulates the systematic presentation of the accounts of the government. It sets out 3 rolling targets, and that is for 5 specific fiscal indicators in relation to GDP. And this GDP could be at market prices. Now, these indicators are the revenue deficit, the fiscal deficit, effective revenue deficit, tax to GDP ratio, and the total outstanding of the central government debt at the end of the year. This statement includes an underlying assumptions, the assessment of the balance between the revenue receipts and the revenue expenditure, and how the capital receipts have been used, and what is the situation of the market borrowings with reference to these capital receipts for the creation of the productive assets, etc. Then there is a medium-term expenditure framework. The medium-term expenditure framework statement is presented to the Parliament under Section 3 of the Fiscal Responsibility and Budget Management Act of 2003, and it sets forth 3-year rolling target for certain expenditure, and it has indicators along with the delineation of underlying assumptions and risks as said before. The objective of this medium-term expenditure framework statement is to provide a closer integration between the budget and the other statements. This statement is presented separately in the session, which is next to the session in which the budget is presented, that is normally in the monsoon session. To facilitate a more comprehensive understanding of the major features of the budget, certain other explanatory documents are also presented. Now, what are these explanatory documents? Let us see. One is the Expenditure Budget Volume 1. This document deals with the revenue and the capital disbursements of various ministries, departments, and gives the estimates with respect to all the items under plan and non-plan categories. It also gives an analysis of various types of expenditure and broad reasons for the variations that have happened in the estimates. Under the present accounting and budget procedures, certain classes of receipts such as payment made by the department to another department, receipts of the capital projects, schemes are also taken in reducing the expenditure of the receiving department. The estimates of the expenditure included in the demands for grants are for the gross amounts, and the estimates of expenditure included in the annual financial statement are for the net expenditure, that is after taking into account the recoveries. The document expenditure budget makes certain other refinements such as netting expenditure of related receipts, so that the overstatement of receipts and expenditure figures is avoided. As a result, the magnitudes of various items of expenditure is realistic. Contributions to international bodies and estimated strength of establishment of various government departments, provisions made are also shown in the separate annexures. Statement showing gender budgeting, schemes for development of scheduled castes and scheduled tribes, then the schemes for the welfare of children are also included in the document. Now, this year, 2 new statements have been added. They are expenditure details and budget estimates regarding autonomous bodies, and also the details of certain important funds in the public account. Now, there is an important concept of plan outlay. What is a plan outlay? Plan expenditure forms a sizable proportion of the total expenditure of the central government. The demands for grants of the various ministries show the plan expenditure and non-plan expenditure, and they are shown under each head separately. The expenditure budget volume 1 also gives the total plan provisions for each of the ministries, and that is arranged under various heads of the development. That is, there is a general category, then there is social, economic and others. And they highlight the budget provisions for certain important plan, programs and schemes. Statements showing externally aided projects under the state and central plan are also included in this document. Now, a description of important schemes is also included in the plan, along with the objectives, targets and achievements, and that is given in the outcome budgets of the respective ministries. The public sector enterprises are a very important features of the Indian economy, and they are there since a long time. Therefore, a large part of the plan expenditure is incurred by the central government every year, and that for the public sector enterprises. Now, budgetary support for financing these enterprises is provided by the government either through investment in share capital or through the loans. Expenditure budget volume 1 shows such estimates of capital and loan disbursement to public sector enterprises. That is during 2015 and 2016 and 17, and categories under plan and non-plan purposes are also shown separately. And there are also details of extra budgetary resources available for financing their plans are also shown. A detailed report on the working of the public sector enterprises is necessarily given in the document, and it is titled Public Enterprises Survey, and it is brought out separately by the Department of Public Enterprises. A report of working of the enterprise under the control of various administrative ministries is also given in the annual report of the various ministries, and it is circulated to the members of parliament separately. The annual reports, along with the audited accounts of each of the government companies, are also separately laid before the parliament. Besides, reports of the Controller and Auditor General of India on the working of various public sector enterprises is an important document that is laid before the Parliament every year. Now, the Government of India also has what are called commercial departments. For example, railways. Railways is a principal departmentally run commercial undertaking of the government. The budget of the Ministry of Railways and the demands for grants to the railway expenditure are presented to the Parliament separately. The total receipts and expenditure of the railways, however, are incorporated in the annual financial statement of the Government of India. All expenditure is depicted in the receipts budget and expenditure budget volume 1 and volume 2. And it also has a net of receipts of the departmental commercial undertakings. That is given in order to avoid overstatement of both the receipts and expenditures. Now, there is also receipts and expenditure of the defense demands. In this, the annual financial statement are explained in greater detail in respect of defense service estimates, and it is presented along with the detailed demand for grants for the Ministry of Defense. Then, there are also details of grants given to the bodies other than the states and union territory governments. They are given in the statements of grants in aid paid to non-government bodies, and they are appended to the detailed demands for grants of the various ministries. There is another important document which is called Expenditure Budget Volume 2. Now let us see what is it. The provisions made for a scheme or a program may spread over a number of major heads in the revenue and capital sections in a demand for grants. In the Expenditure Budget Volume 2, the estimates made for a scheme or a program are brought together. They are shown on a net basis and they are given major headwise at one place only. To understand the objectives underlying the expenditure which is proposed for various schemes and programs and the demands for grants, suitable explanatory notes are included in this volume. It also contains brief reasons for variations between the budget estimates and revenue estimates for the current year and the requirements for ensuing budget year. In this, the estimated of receipts included in the annual financial statement are further analyzed in this document called receipt budget. This document provides details of tax and non-tax revenue receipts and also capital receipts. It explains the estimates also. The document also provides the arrears of tax revenues and non-tax revenues. And this is mandated again as per the Fiscal Responsibility and Budget Management Rules of 2004. The trend and receipts of expenditure along with the deficit indicators. There is a statement for that, and this statement is pertaining to the trend of receipts and expenditure along with the deficit indicators. Then the statement pertaining to National Small Savings Fund, statements of revenues foregone, statement of liabilities, statement of guarantees given by the government, statement of assets and details of external assets are included in the receipt budget. This also includes statement of revenue impact of tax incentives under the central tax system. This system seeks to list the revenue impact of tax incentives that are proposed by the central government. And this statement was earlier called a statement of revenue foregone, and now it is brought out as a separate statement from the year 2015 and 16. Now, this statement, however, has been merged in the receipt budget from 2016 and 17 onwards. Budget at a glance. This is a document which shows in brief the receipts and disbursements along with broad details of tax revenues and other receipts. This document also exhibits a broad breakup of expenditure, plan and non-plan, and also the allocation plan outlines by various sectors and the ministries and the departments. Further, it also shows details of resources transferred by the central government to state and union territory governments. This document also shows the revenue deficit, the gross primary deficit, the gross fiscal deficit, the excess of government's revenue expenditure over revenue receipts constitutes a revenue deficit of the government. The difference between the total expenditure of the government by way of revenue, capital and loans, net of revenue. The difference between the total expenditure of government by way of revenue, capital and loans, net of repayments on the one hand, and revenue receipts of the government and the capital receipts which are not in the nature of borrowing but which finally accrue to the government on the other hand constitute a gross fiscal deficit. So basically the gross fiscal deficit is the difference between the total expenditure of the government and the total revenue of the government. The gross primary deficit is a gross fiscal deficit reduced by the gross interest payments. In the budget documents, gross fiscal deficit and gross primary deficit have been referred in an abbreviated form as fiscal deficit and primary deficit respectively. Now, the budget at a glance also includes a statement indicating the quantum and nature of share in central taxes, grants, loans of the total resources which are transferred to states and union territory governments. Details of these transfers by way of share of taxes, grants in aid, loans are all given in the expenditure budget volume 1. Bulk of the grants and loans are disbursed by the Ministry of Finance, and they are included in the demands for transfer to states. The grants and loans released to states and union territories by other ministries are also reflected in their respective demands. Finally, we come to what is called the highlights of the budget. This document explains the key features of the budget, that is 2016 and 17, and among many things it indicates the prominent achievements in various sectors of the economy. It also explains in brief the budget proposals for allocation of funds to be made in important areas. The summary of tax proposals is also shown in the document.